Okay, hello everybody. We're back for the final stretch. It's been I don't know where time goes actually. It's 1:18 now here in Chicago, and we're in the third part of today's session, part two of Dr. Gary's presentation. The three W's, trading today's markets with insights from Wyckoff, Weiss and Williams. So this session will go for about 90 minutes, and then we'll take a 15-minute break, and then we'll run into the close. Got lots to show you there as well. Some of my favourite stocks that I trade. We'll be showing you some setups there. So would you please all give a warm welcome to Dr. Gary Dayton for part two.
Yeah. Okay, thank you. Hi, everybody. Can you all hear me out there on the web? Just give us a Y or a yes. Make sure that the sound is okay. My voice is good. Okay, great. So a little bit earlier, we just as a side note here, I got a bunch of emails from a few folks here, from Keith and Kenneth and Tom and Jocelyn and Dave, all interested in excuse me, all interested in becoming beta testers for the wyckoff.org software that Gavin had mentioned earlier. And I'll mention it again before we go, but thank you for. There we go. How's that? Better? Okay. All right. Microphone wasn't working here in the room. So thank you all for those folks for sending in their interest for becoming a beta tester. And if anybody else wants to, we put my email address. Just send me an email. We put that in the room, and you can get on the list. Okay. So for the next 90 minutes, what I wanted to do is take us back a little bit, back to reading individual bars, reading the market bar by bar. You've seen some wonderful ideas and wonderful ways of looking at the market through waves and wave volumes, the Weiss wave. We've seen trade guider signals, signs of strength and signs of weakness. And we've seen W's and M's and other things, but I want to take us back a little bit to just basic bar by bar reading of the chart, looking at the price bar and the volume, just to see what we can see in those price bars and volume. And we'll look at weakness, and then we'll look at an example of strength. And then we'll do a few market applications, and I'll show you where you can use this in conjunction with the Weiss wave and have maybe a little bit better of an edge in doing so. Okay. So here's a market. It will remain nameless. It's a daily chart. I took the data of the dates and the price levels out. Some of you may recognize this. Do we have any sense of what this market might be doing? Is it going to be going sideways? Is it going to be going up, going down? Anybody have an idea here? Sideways, maybe down. Okay. Well, let's find out. Let's find out. I've numbered the bars here, and it's a good idea just to sort of stick on the page of the chart at hand and not jump ahead. That way we'll be able to learn together. What do we notice about bar number one? What do we notice about bar number one? First of all, we're in an uptrend, right? And we've been in an uptrend for a while. If these are daily bars, that's several weeks. What do we notice now about bar number one? Wider spread and larger volume. Let's take a look at that spread. And the spread is the difference between the high and the low of the price bar. Gavin showed you that yesterday. And spread and range is the same, we're synonymous, they're the same term. It just means the difference between the high and the low. So allow your eyes to go back in time here. And do we see any bar that looks similar in terms of the size of spread to the downside that we see here? This is a down bar, right? This bar closes down here. And we just have a little rule of thumb. If it closes below the close of the previous bar, it's closing down, okay? Do we have another down bar in this move, in this trend from this point here to this point here? Do we have another down bar of equal size? No, do we? It's the largest one, right? And look at the volume. Do we have another down bar with that kind of volume on it? So what do you think is happening there? Pardon me? There's a change. They're changing their mind. The traders are changing their mind. Yeah. Well, they've been buying certainly all this time. And now suddenly we get the largest down bar on the largest amount of volume since the uptrend began. And prior pullbacks, here and here and here and here, haven't been on the same spread. Maybe this was close, but it's not with the same volume. And it's coming in as the trend is mature. This trend's been going on for a while. It's old in the tooth, as we might say, right? Potential change of behavior here. Remember, David had talked about how a large down wave on increased volume, largest down volume on in the uptrend on a down wave, that signified a change of behavior. Well, we can see the same thing in the price bars. Okay. But on bar 2, we dip underneath the low of bar 1, and we rally back up above it and close on an up bar and close fairly firm, okay, indicating that the market wants to try to continue to go up. But what do we notice on bar 3? What do we see there? Low volume on an up bar, right? What about the spread? Remember, Gavin told us about the spread, said that it was activity that occurred within that day, trading activity. What's the activity like on that bar? It's smaller than norm, right? It's smaller than most of the bars. So there's less activity as measured by the range or the spread of the bar and the volume. We see the volume is quite low. In fact, in the past, what we've seen as we've dipped down, the low volume occurred on the pullbacks. Now we're starting to see low volume as the market attempts to rally up. That we would call no demand. Okay? Doesn't necessarily mean that we want to initiate a trade here, but we notice this. We're in an uptrend. Suddenly we have the first large down bar on the first large volume. And now, as we try to rally up, we're seeing demand withdraw from the market, at least on this day. It's not enough to give us a decision point here, okay? And it's the lowest volume of the last 6 bars, right? And in VSA, we would use the last 2 bars as a rule of thumb. Is it lower volume than the last couple of bars? As a rule of thumb, a useful rule of thumb. But here, as Paul points out, it's lower than the last week of volume, more than the last week of volume. And what happens on bar 4? What happens on bar 4? Closes in the middle, doesn't it? it attempts to rally up above the high of 3, and volume comes in here. It's not massive volume, it's not huge volume, but it's certainly larger volume than bar 3. And what does it suggest if it closes down below the close of bar 3? Somebody's selling into it, right? So tried to rally up, tried to push up above the high of bar 3, but somebody stepped in and capped the market there. And we see that by the close. So see what we were getting here now, a picture? We've got a little bit of supply come in terms of the largest down bar on the largest volume. We try to rally up, and it's light volume going up, lack of demand. And then we push up above the high of that bar, and selling comes back into the market. So there's a picture of supply coming in. Any questions now from the web here on this? So that all seemed pretty straightforward to everybody? Good. Let's take a look at bar 5. What happens there? What happens on bar 5? The way I would interpret this is that sellers came into the market early probably in the day, and buyers stepped back in and pushed the market back up and closed it fairly firm, not quite on its high, but on it near its highs, certainly above the middle. And we see higher volume coming in, don't we? Okay. So there are still buyers out there. And when we get a picture of supply and demand, when we're reading bar by bar, we want to be very patient, and we want to begin to build a case of either supply in the market or demand in the market. And at the moment, we would have to say that we're in an uptrend and have been for quite some time. We see some evidence of supply coming in and maybe a lack of demand, some indication, some changing of behavior, but again, not something that we would necessarily take action on, okay? So on bar 6, which isn't labeled here, but it's the one in between 5 and 7, we come back up to the highs here of the previous tops. What's the volume look like? It's low, right? And bar 7, same thing. We peak up above the high of the previous bar. We're making a new high. And what's the volume saying? It's lower, right? Is that any way to make a new high? Not if this market is a bullish market. No, it's not. What do we see now on bar 8? Heavy volume, a big down bar, right? Closing on its lows or near its lows, and big volume. Same amount of volume as bar number 1. So now 2 times we're seeing that high supply coming into the market, or heavy supply coming into the market. But the market holds and starts to rally up. Look at bar A. What can we surmise from bar A? What do we see here? More volume than 7, but still low volume, right? Still relatively low volume on an attempt to rally up. So we're beginning now to get a real picture here, especially after bar number 8. Supply and an inability to really push the market up, or lack of fuel, lack of effort to push the market up. Okay. On bar B, it's kind of the repeat of bar 8 and bar 1, isn't it? It's a down bar. It moves down easily. It closes on the low. In fact, it looks to me like intraday, the market got pushed up above the high of yesterday, and then was a trend day to the downside all day long. It was just selling all day long. Okay? And then what happens on bar C? What is bar C, by the way? What do you surmise about that? What can we tell about that? Low demand, okay, because of the low volume, right? It's also an inside bar. It's inside bar B, okay? And in fact, bar B and A, not quite an inside bar, or it's not not all of these bars are inside, but very close to all being within the range of bar 8. See that? Remember David had said that Wyckoff talked about moments, what did you call it, David? The moment of recognition, where a feather's weight, one side or the other, could tip the market. Could this be one of those places, right? Because we've been coiling up inside a couple of large down bars here, really coiling up all along in here. So we want to be aware of potentially making a trade in this area. Okay, maybe putting a sell stop underneath the low here, maybe just taking a sell short on the close. You'd have to stop it up above 7. And you might have even gotten short at 7 because we had seen that supply come in and the lack of demand up there. And then we have that small, narrow upthrust type bar up on bar number 7. Let's see what happens with this. Any questions about this so far from the web? Okay. Before we go further, I want to highlight something here. Before we had the Weiss wave, we had a kind of eyeball volume. Okay. Notice what's happening here since we started with bar number 1. I've boxed in the volume, and you'd see this on the wave chart very well. But I've boxed this in. We can see the volume has gotten substantially larger than all the volume in this uptrend. Okay, on average, the average volume might be somewhere in here, and the average volume in here might be something like that. Okay, so there's a lot of activity going on here. A tremendous amount of activity. Somebody's working in this market. Somebody's working in this market. And by reading the bars as we have, we see that its supply is becoming more dominant and more forceful and more aggressive in this market. And demand is unable to rally the market up. The buyers are unable to rally the market. Maybe they're exhausted. I don't know. But that's the picture that's starting to emerge. Everybody see that? Okay. Good. Anybody know what day this is? This is the flash crash. That's right. This is the flash crash. Isn't it interesting? Isn't it interesting? Now, I'm not suggesting that we could have predicted the flash crash and the extent of the down move. I'm not suggesting that at all. But what I am saying is that we could read something, some kind of a down move was about to take place. Okay? And this is a fairly dramatic event of it, but it's an important one because we can anticipate this kind of stuff. So on D, just to play this one out, on D we get more supply to the downside and it starts to break down outside of that coiled up range there and also down below the lows, down below the support. It closes down below the supports of bar 1 and 8. And we can see that, right? And then the next bar, we get a very weak attempt at a rally, and then we get the flash crash day. And what do we see on the flash crash day on bar D? Or I'm sorry, F. It's hard to see this, actually. What do we see on bar F? Widespread, no question about it. It's got to be the biggest spread up to that point for the year, or maybe a couple of years. Do you know what that was? How big of a bar that was compared back in time? Pretty big, yeah. It was maybe a year. We didn't see a spread like that for at least a year. But look, it closes in the middle, right? So certainly there was supply on that bar. There was selling on that bar, and there was a lot of it. But because of the close, somebody stepped in and moved the market from the lows here all the way back up into the middle of the bar. Okay. So somebody was in there buying. And we can see that just by looking at the price bars. Let's see what happens now. So is it H? Is that the next bar there? Yeah. On H, we rally up. I, we're coming into the supply. Notice that the supply area is right in here. And what happens by the time we get at K? What are we noticing there? Volume's gone, right? And what about the spreads? What about the ranges? They narrow down. They're still, I mean, they're good size compared to maybe the last few months here, but they've narrowed down compared to the point at which we started to drop down out of this market. So what does that say? What's that say? No interest in the upside. If it's not going up, the odds favor going down. Right? And we have a little, let me erase these here. I don't know why I can't erase that, but bar K is a little hidden up thrust. Maybe on a 60-minute chart, you would see an up thrust more clearly. Okay. Nice place to take a short. And then we come down. And we drop down from there. And then we start to see the volume build up in here. And so we know, I guess, that most people will know that it did take some time to kind of absorb through this supply. But is it any surprise that we come back down to a support level? Right? Is it any surprise? Not really. Not really. The markets tend to go from support to resistance. You know, they tend to move from support to resistance and back again. So it's it's very, really, really helpful to know these levels in advance and have them, if not on your charts, somewhere in your notes. And if the market starts coming down to that area, you want to be aware that the market can potentially stop there. And what do we see as we approach here? What are these two bars, the last bar and the third bar in? What do they suggest? That there's somebody buying in there, right? And we see that in part from the volume is pretty good there, but we also see it because the market dips down low and rallies back up, and dips down low and rallies back up. So we can expect some sort of a rally from here. And now that we all know that this is the flash crash day, we did get some trading range action. Okay. It's worthwhile to go through turns in the market like this, in the markets that you trade, and see what the price and volume behavior was down there, or were down there, whichever the correct English is. It'll serve you well. Being able to read the bars is a very, very useful skill. And as you see, it's just logic. We're just applying logic, not much more. There's no special insight or special secret sauce to this. It's just applying logic. And we were talking over lunchtime about the effort required for this. And everybody Gavin and myself and Steve and David will all tell you that it takes effort to learn this, and it takes practice to learn this. And one useful thing to do is to begin to practice on the price bars and see them. All right, let's take a look at, that was weakness. Let's take a look at strength now. Let's see what we can see. So on bar 1, what are we seeing there? Widespread down, right? Closing pretty close to its lows, breaking out of a trading range here. This little trading range to the top, to the side here. Yeah, it could be a trap move, but I would look at this and say that at the end of the day on bar 1, sellers have to be in control, right? That certainly there was buying on that bar because of the high volume, but this is the highest volume, at least on the chart, to this point, and it's pretty strong bar down. It's widespread, wide range, meaning lots of activity. And I can just kind of picture that this, as it broke down, was just a trend day to the downside all day long, selling all day long. There might have been a little buying coming in the afternoon because it did lift off the lows. So if it were all selling, we would see it, all the way down on the bottom. But we're not seeing that. What about bar number 2, the very next bar? What? A lot of volume, right? It exceeds bar 1's volume by a bit. So we're seeing very, very large volume. And what happens to this price bar on all that volume, on all that effort? What happens? It dips down low and closes sort of firm, right? Closes underneath or above the low of the of bar number 1. What else do we see here in terms of activity and in terms of the character of this bar that's a clue for us? I'm sorry? Closes near the top, so it ends up buyers came into the market. But what else is significant? Closed inside yesterday's range, right? That's significant too. But there's one other thing that's significant. And it has to do with the amount of volume and the range of the bar. It has more volume than the previous day, but the range is less. And so what does that suggest? If yesterday's day was predominantly selling, and they moved the market from here to here on this volume, wouldn't you think that if this were also all selling, if sellers were still in control, that they would move the market an equal amount, or maybe a little bit more because this is a little bit larger volume, and they would close it on the low down here somewhere, right? But they didn't. They closed it firm, but also the range of that bar, the spread of that bar narrowed down a little bit. And yes, there was a lot of selling there, no question about it. But as there was selling, it reached a point where buyers stepped in force and held the market from going lower. And they kind of held it up, if you will. And that had the effect of making the spread of that bar a little bit narrower. Okay? So when we're reading price bars, we want to pay attention certainly to the volume and the close in relationship to the last few bars. But we also want to look at that spread too, and the volume on that spread, and the volume on the other bars as well. So, kind of just to give it a different sort of flavor, the effort to go down was strong here on bar number 1 on this volume. That was the effort. Well, we had a little bit more effort even on bar number 2, but the result was not just that we closed it firm, but that we didn't go down as low before we closed it firm. Okay, didn't go down an equal amount. Everybody get that idea? So then on bar number 3, we get a reversal. We tried to rally up above bar number 2, the high of bar 2, and failed to do that. But immediately on bar 4, we held that low and pushed it back up again. Okay. And then bar 5, what do you think is happening on bar number 5? What do you think might be happening here? You think it might be a deliberate attempt to suppress the price to buy more? That's possible. That's possible. I kind of think that, we're coming back into this area of supply. So the sellers who shorted here might defend that. Other sellers might see that there's an opportunity here. Price is getting up higher again. Their bias towards the market is down. They might start initiating short positions in here. But what I'm also thinking is that in these 3 bars, and maybe also in bar 1, maybe the end of bar 1, we'll just kind of clip that, buyers were trying to hold this market up, okay? And we see pretty good volume in here on the first 4 bars. And there's a little bit of pumping action or churning action where the market comes down and the buyers push it up. Sellers push it down, buyers push it up, okay? By the time we get to bar 5, where we're coming back into supply, buyers just may have spent their wad. They may just not have any more money at this point. Okay? They may just be a little bit exhausted. And so the market starts to come down on the next bar. And bar 7, we go underneath the prior bar, bar 6, and then buyers step in and push it all the way back up above the high of the previous bar. But that doesn't last, and we come down to bar 10. And what's bar 10? It's a reversal bar. Yeah, it's a spring, right? There we go. Sorry, I'm trying to erase all the other marks there. I'm getting to be like Steve. And is buying on, yep, it's pretty good volume. Notice, though, that when we dip underneath, this is a spring. We have a low here at bar 2. We dip underneath of it. So sellers come in, possibly, dip underneath, and buyers come and do not allow it to go down any further. Okay? As David would say, it fails to follow through to the downside. So if this was supply in here that was still dominant, here's the opportunity for the sellers to come back into the market and push the market down. The sellers, of course, have an objective, and that is lower prices, because they're short. Okay? They want to see lower prices. And it's almost as if they're calling them out, challenging them to come out and play, to come out and take the market down. And they fail to go further down. They fail to follow through. And they close it firm. So that's a nice spring, and that's a great place to buy. If you were watching this market intraday, actually this is a weekly market, so there'd be an opportunity on a daily chart to buy this, and certainly on an intraday if you're aware of these levels, to purchase in here. Right there, yeah. One of ours too, one of David's and mine. Yep, that's a spring. Yep, springs are excellent. Springs are excellent. Notice one other thing too, that around bar 1 and 2 we have good strong volume. By the time we get down to bar 10 and we go underneath, much less volume. Okay, volume diminishes down there. It's another indication that there's no selling left underneath the supports of this market, that the selling has been absorbed out of the market, taken out of the market. And we rally up on to 13, and notice, let me erase this so you can see it. Yes, the entire setup is the spring. The question was, when we call this a spring, is it the entire setup? And the answer is yes. And I personally like to see some space. And if you think about this on a daily chart, these are weeks. So there's 1, 2.5 months in here. right? So that's plenty of time. That's plenty of space between the initial support and the spring level. Okay. Sometimes people will I don't know, say this. That's a spring. Well, maybe on a daily chart we could call it a spring. That would be hard for me to call a spring, although some people might do that. Philip, great. Oh yeah. Oh, Philip, I'm looking forward to. Yeah. Yeah, they just booked the flights for me to go to London at the end of the month in June. So yeah, and I got to wear a parachute. The seat is so cheap. But no, we're teasing. But so Philip, it'd be great. I can't wait. We'll have a beer or two together. Yeah, me too. Me too. Yep. Go ahead. Yeah, Abdul asked the question, and it's a good one. Is the move down, is the drive down intentional, or does it just happen in the market? I suspect it's intentional. We don't know, we never really know. And certainly when we watch this, you know there's a support level there, and you know that frequently they will spring the market, or the market will spring, and it offers a tremendous trading opportunity for us. Whether it is smart money behind the move, driving the move down, probably, but I don't really think in those terms. What I think in terms of is really who's in control here. Are the buyers or the sellers in control? And it's just the way I think, and it's just my approach to the market. It's not necessarily right or wrong. I know that sellers are in control here. I know that buyers are stepping in and attempting to exert control. By this point, I know buyers are in control, and that's what I think about. And that's what helps me to be able to make, trades, usually good trades, hopefully good trades. So I hope that answers the question. Probably it's manipulated, but I don't really think about it in those terms. I'm just thinking about, is buying dominant or selling dominant? And here I know that, or I don't know for sure 100%, but the odds are very good. The probabilities are very good that demand is now in control of the market. And so we get a rally up to 13. And let's just take a look at these three bars here after the spring and the volume. What do we notice? What do we notice? We're seeing higher lows on each of these price bars. We're seeing higher highs on each of these price bars. We're seeing firm closes on all of them. And look at how the volume, and by the way, this is the total New York Stock Exchange volume rather than this is the SPX, the S&P cash market. And rather than using the cash volume, I like to use the total volume of the New York Stock Exchange. And the S&P is a good sample of the total New York Stock Exchange universe of stocks. But notice how all the stocks on the NYSE, the volume is increasing as the market moves up. Bullish behavior. Bullish behavior. Not only that, but we have broken up above bar 5, firmly broke up above bar 5. And we've gone deep into the supply that we saw in bar 1. So buyers are making a real statement here that there's strength in the buying. That there was some sort of accumulation that occurred in here, and now they're beginning the markup. Okay? But we hold up in here, we hold gains pretty well for almost a month, and then we dip down. what happens on bar 17 and 18? What do we see there? We see a bottom reversal, right? Tom Williams talks about these a lot. A nice, solid bottom reversal, 2-bar bottom reversal. We want to see that generally after a down move of some degree. And here we have a modest one, but a nice one. Notice the volume. As we come down, what's the volume doing? It's decreasing a little bit. It's not increasing to the downside. We were just a few weeks ago, a few bars ago on this chart at bar 1. Sorry, I got jumping ahead there. In this same area, if we go back to bar 1, we had tremendous volume coming down. You see that? And now we're coming down in the same area, and volume is about half of that, maybe slightly larger than half of that, but it's significantly less. And then the market reverses. This is a test of the spring. We have a nice spring, and sometimes the springs just go straight up or almost straight up. They take your breath away. They can be so powerful. And sometimes, as in this case, they come back and they test. But the liftoff from that test on the bottom reversal, the 2-bar bottom reversal, is pretty strong. But what do they do on bar 20? What do they do on bar 20? They go back in and say, well, you know, this move up was on pretty good volume. Bar 19 here, or 18 rather, was a good move up. They just come down and test it one more time. And we know it's a test, likely to be a test, because the volume doesn't expand to the downside. Again, we're in that same area, and they're making sure that there's no supply there before it gets taken up. And the very next day is almost a repeat of bars 17 and 18. We get a little dip underneath and then a rally up, another nice little reversal bar. And then the market heads on up. Any questions on that? So we're looking at volume, we're looking at price, we're looking at close, a price bar, we're looking at close, we're looking at the spread, we're comparing the current price bar with previous price bars, comparing the current volume with previous volumes, we're comparing the area of the current price action and volume action with the price and volume action that occurred in a similar area not too long ago. Okay? This is looking at background conditions. This is always keeping in tune with the market. Back and forth, comparing and contrasting, evaluating what's happening now compared to what we were seeing before. And it's no different when we look at demand as to when we were looking at the supply. We're seeing the big, in the supply, remember, we were seeing the big down bars on the big volume, inability of the market to rally, pumped up and down. We get that message. Nothing happens in a price bar. Nothing happens in a price bar. This occurred over almost 2.5 months before we had that spring. And then we rally up for another 1.5 months or 2, and then we get tested. Okay, the market moves depending on the time frame. If we were looking at a 5-minute chart, you know, it all would probably happen in an hour or so, but it gives you ample amount of time to be able to assess what's going on and then to make look for opportunities to make decisions at the right spot. Any questions from the web there, Gavin? Are you guys all sleeping out there? Okay. Okay. It's after lunch, I know. All right, so let's take a look at a few recent market applications here and see what we can see combining the price bars and the Weiss wave volume. I don't look at the wave itself on my charts because I like to look at the price bars. Okay, it's a little bit different than what David was showing you with the small tick charts, but And remember, from the presentation that I did yesterday, I'm always looking at yesterday's low and yesterday's high. And if you're swing trading, we saw on the flash crash that the market stopped where? At a significant low, right? So it's the same thing. It's the same thing. So we can see as we come down, what do we notice about this? What do we notice about this wave coming down? Yesterday, we had some good wave volume going to the upside. We had some good demand there, right? And down here, as we came down, we also had some pretty good supply. Now, as we come back into that same area, what are we getting on the wave volume? It's significantly less. We get a nice little reversal bar here. The market looks like on the bar before the last bar on the chart, it looks like it wants to go and break that low. But the very next bar dips underneath and then rallies up and closes up above that low support. It's another spring, exactly. This is another spring, one of our favorite trades. It's another spring. Now, see, Steve got me thinking about doing this. That's not a good idea. So let's see what happens with that. We get another bar here. If we were in doubt about that initial spring, we get further confirmation of upside in that this price bar dips back down and doesn't go all the way down to the lows. It goes right to the support of yesterday's low, rallies up and closes in the middle, but above the prior bar's close. Now, what happens on this bar? We rally up. What happens here? What can we start to see here? This big, wide price bar, big, wide spread, lots of activity, right? Are we getting the kind of volume in here that we'd want to see on a big move up like that? Probably not, right? So that might be a little suspect. And also it's closing in the middle. Let's go a few bars further. What happens here? Market tries to rally up, and somebody comes in and steps on the market, closes it lower, right? And now the Weiss wave is turned. We see a down wave starting here potentially. And if we weren't sure, now we should be. Yep. There's just no ability for this market to rally. Okay. Each time it tries to rally up and it fails. So somebody's in there selling. Where might we go to? I'd say at a minimum, we want to see a test of this as a minimum. Maybe it's going to go down lower. We'll see. And here we do go a little bit lower and we test that area again. What do we think here now? What's going on here? Could be a spring. There's pretty good down volume, actually, I think. Right over here, no. But on this wave down, we saw some pretty good volume. In fact, it's larger than at least what we see on the chart here. Okay. So now, is this effort to go down with no real reward, or is this supply coming into the market? What do you think? So we're hearing both. Supply coming into the market and effort to go down, but no real result. Jack is saying that it's testing the bottom and it will either go through it or it will fail. Anybody from the web have an opinion on this? Okay. Well, let's take a look at the price bars. They're holding higher. In fact, as we come down, the very first bar below yesterday's low here, I just put a little arrow or a wiggle there. What's the spread there? What's the range there? It's narrow, right? What does that suggest? If we're breaking down through a support and we have narrow range, it suggests somebody's holding the market at that point, right? Right? Everybody get that idea? It's an important one. There's good effort to go down. Now we dip underneath on the next bar right here. We dip underneath the low and then we close back up and then the market rallies up. It then comes down, doesn't it? It dips down below the support level again, the 3 bars back, but then closes pretty firm again. So just from the price bars alone, we see a narrowing of spread, and twice it goes down, but it bobs up or closes firm. We're at a significant support level. This is a spot where we could make a bet to go long. This was probably effort to go down, but the result not being all that rewarding. And in fact, we go another price bar and the same thing. No ability to go lower, no ability to cause the market to react. Yeah, good point. I missed that. Jack reminded me to make a comment about the volume. As we tried to come down here on this wave down, it's signified by this red volume bar here. There's just no downside volume. So the volume got taken out of the market. Good observation, Jack. Good observation. So we rally up and we get better volume coming in now to the upside. Okay. And what does this look like to everybody? What does this look like to everyone? Looks like a spring, right? We've sprung again here, and a test of the spring, right? As we rally up, we get good upside volume coming in. As we come down to test, we get low wave volume here, very low wave volume. And then we're just holding right along yesterday's low, and the very last bar here is a pretty firm bar, closes pretty firm, okay? So we can combine the Weiss wave, the market structure, and reading the bars individually and begin to get a pretty good handle on what the market might do next. And so we can expect for this market to try to rally. And there it does. And what do we notice about this rally as we start to move up? Good volume. Yeah, excellent volume. Really strong volume. It's at least equal to the previous volume. So now it's gone sideways a little bit. Do we see supply here coming into the market? We do? Okay, is it significant supply? Not really. It's holding the trend. Yeah, I'll draw a trend channel in a second. There's some supply over here, right? There's supply over here. We saw that before it took the market down. Now we're back up into that area. And does this look like, both in terms of the price bars and in terms of the wave volume, the downside volume, the supply volume here, does this look like there's a lot of supply coming into the market? Not really, does it? In fact, it looks like it's holding gains in here and trying to absorb whatever selling is coming in at this point from over here. It's trying to absorb that. Yep. That's right. The comments were that the people who were caught here going long are now selling over here, but they're just getting out break even. Maybe some of them are adding to their position and about to be, yeah. So let's see what happens with this. This is where we were, and I know that the web audience didn't hear this, but Ken suggested that it was operating within a trend channel, and it was, in fact. And so we see it rally up, and where does it rally to? We can draw that trend channel in. Remember we talked about this yesterday? We draw it from a wave low or a swing low and a swing low, two significant swing lows, and then run a parallel to the high between them. And we might first start with a line like this and a line like this, but that's not really helping us by this point. And so we have to adjust that. That's part of the art of drawing lines. But we push up above this high here, and we come right into the top of the trend channel where we're going to be overbought. Okay. Oh, missed the, sorry about that. And we can see that, in fact, price is having a difficult time going higher. Why is it having a difficult time going higher? What's going on with these price bars that would indicate that? These few price bars in here. Closing off the highs, right? Right, closing off the high. But remember spread and range? Narrowed suddenly, didn't it? I mean, nice wide spreads coming up, and then suddenly at the top we're narrowing, suggesting that potential supply is coming in. There's also a comment that there's, over on this volume here, you talk. Yeah, there's. Right. The comment is, or the question here is that the sorry, I'm not doing well with this. Yeah, there was volume here, and this drove the market from this point to about this point, and then this volume drove it from about here to here. They're pretty close to being equal. Yeah. What's also telltale here is that supply has come into the market, right? With the Weiss wave volume. We certainly see that. And then as the market tries to rally up, look at the volume. Just no upside volume. But we've had a nice move in the S&Ps. No question about that. A very good move in the S&Ps. And so buyers are probably tired out. Okay, so let's take a look at another chart here. It's not dissimilar from the previous chart. We're at a low. We are coming down to that low. What are we doing here, do you think? Is this effort, all this volume here, is this effort to go down? Notice that it's larger downside volume than what we saw yesterday, right? Is this effort to go down and it's going to stall out and we're going to rally here? Or is this supply, do you think? And how do we tell? Can we use the price bars to help us along there? Right. Down volume did dry up right after that. So is this someplace to buy then? Someplace to watch, okay. Yes, it is. The comment here for the comments here for the folks on the net is that we're at a significant point here, and that if it does break down below the low, it likely will go a lot lower. And we clearly are at a significant point. And remember what we've been talking about. There are points in the market where a feather's weight, one side or the other, will tip the scales. And if we can discern those and identify them, we have much to win and little to lose. That's the idea behind trading this method, or at least part of the idea behind trading this method. Mm-hmm. The extreme. Right. Let's take a look at this. Let's take a look. We come down here, we start to see a little narrowing of the spread, and this bar tries to rally up, but it can't get up above yesterday's low, can it? The next bar, unable to rally above yesterday's low, comes back down. We see an attempt now to rally up, and notice the wave volume on that attempt. Not much there. Okay, one sort of rule of thumb is that when we suspect supply is in the market, we want to see demand or buying prove itself. Okay, it's not proven itself here. Yesterday, this is the standard against which we can look at today. Mm-hmm. These are three-quarter point. Question from the web is what reversal calculation am I using on this Weiss wave? And it's 3/4, 0.75 of a point. Boy, I'm worse than Steve here. Yeah, we need Steve's help here. So I'm using 3/4 of a point reversal here. Okay. So we're having trouble even getting above yesterday's low so far, and we don't see much demand coming in. And the second to last bar does close above yesterday's low, but suddenly we reverse that. Okay. Does this look like strength? No, it doesn't. It looks like weakness to me. And that's exactly what happens to it. It falls down. Okay. So let's take a look at this, because I thought this can be confusing when you're using the Weiss wave. It was for me when I first started out. It was a little bit for me. It can be confusing. Here's two trades or 2 days in the market where very similar events occurred. We're at yesterday's low and yesterday's low, and we come down on good volume. We come down on good volume. One market goes up, the other one goes down. Okay. Why is that? Well, I just highlighted where I saw the buying bars coming in, and also the selling bars here. And just on a sheer count, there's more negativity in this chart than there is over here. Here we only have one negative bar, and many bars or several bars here are trying to prop the market up. Okay, and still the volume in this area is fairly low compared to the wave coming down, and the same thing here. Right? So reading the price bars can be a very big help in some of these critical areas. And that's kind of the message I wanted to get across with this. Make sense to everybody? Yeah, is that helpful? Good, good. Here's another day. Let's take a look at this. Fun stuff, I think. Here we're just at yesterday's high. Are we going to go break above that high, or are we going to fall down? Is the question. Is this an up thrust, or is this going to hold the gains in here and go higher? Do we think? It's kind of difficult to tell, isn't it? Let's see if we can add a little bit here. We see, what I see is that here's yesterday's high. We try to get up above it, and we haven't talked about this until up till now, but we really see some shortening of the thrust in the price bars. And we talked about shortening of the thrust in the waves. Well, we can see that in price bars as well. And here, it's only signifies when it tries to go up that it's hard to move the market up. It's difficult to move that market up. And we do go up a little higher, but look at the result. We try to rally up and bang, it closes back underneath yesterday's low. We hold in here for a bit, and it looks like we might try to rally. But as we try to get up above yesterday's high again, market gets a bit slammed down. Okay. And now we rally up again. Notice the spreads on the bars, the ranges on these price bars. They're narrower compared to this one and this one. Why is that? We have to ask ourselves. Possibly somebody's stepping on these bars as it's rallying up. Notice the high volume coming in here. And look at the modest amount of movement occurring and the narrowness of the price bars as we go up. Everybody see that? I go one bar more. We try to rally higher, and look at what happens. They push it back down again. And these now are numbered. You can see these are the same areas that I was talking about. Number one, the little shortening of the thrust, difficulty, shortening of the thrust in the price bars, signifying difficulty moving that market higher. An attempt to go higher and an up thrust that comes back underneath yesterday's low. Another attempt on 3 to go higher, back underneath yesterday's low. Lots of volume coming in. Very small effort for that, very small results for that effort. And one final up thrust here at bar 4. And we come down. Okay, and the target, if we can't make it up above yesterday's high, if we're playing this game on an intraday basis, then the target is going to be for a move back down to yesterday's low. I'm always thinking in those terms, you know. It may not get there. It may not get all the way down to yesterday's low. We may see it hang in here, maybe at this level. But we would start to see in the price bars and in the wave structure and the wave volume structure an inability to go any lower. Right? That's a good question. Nathan from the web asks if I have any kind of a checklist that I use before I go into the market. And I do. And in fact, when I teach this, I encourage everyone to have a checklist of what they're looking for. It's interesting. Those of you who know me know that I love tennis. I'm like a tennis nut. And Philip does too. Oh, yeah. Are we going to? Whoa. Yeah, thanks. Does he? Yeah. Gavin, you probably didn't hear that little exchange. Gavin is telling me to challenge Philip to play tennis since I do play tennis, but he's betting on Philip because he says Philip is a heck of a player. Oh, and plus because he's British, yeah. Always that. That's a good question. When was the last #1 tennis seed? Yeah. Very good, Jack. Thanks. So back to the tennis exam. I was down in the U.S. Open one year, and I happened to get some good seats close in to some of the action. And Serena Williams, who a very powerful female player, who was #1 at the time, and had been, she and Venus, her sister, were dominating women's tennis for quite a number of years, and they were in their prime at this point. And you know, every other game that's played in tennis throughout a tennis match, they have what's called a changeover, and the players get a chance to sit down for a couple of minutes and catch their breath. So I was watching that, and every time Serena Williams sat down, she dug into her tennis bag and pulled out a couple of pieces of paper. And you saw her kind of going through her checklist exactly about how she was going to play her opponent. I thought, that's clever. That's clever. Here's the world #1 female player who, I mean, she dominated. There's no question. She's a powerful player. Dominated women's tennis, yeah. And she's got a checklist. Well, if she's got a checklist, that can't be all that bad of an idea to do, and it's not a bad idea to do. So if you go back to my presentation yesterday, and we highlighted the principles that I look for in the market, and I think it's in the middle of the slides there. There's your checklist that I watch for. And David reminded me that one thing that we would add to that would be bag holding, where the market is being held up on the bottom. And you could also add to that Gavin's end of a rising market, or capping the market, I tend to refer to it as. But this idea here, this is not quite end of a rising market, but this idea of good effort and narrow price spread suggests a capping of the market. So you'd add those two things and you'd have a pretty good checklist, I think. Okay. All right, so here we are. We come down and we bounce off of this. Is this a place to take a spring trade? Does anybody think? And here's where logic is going to play. If we just failed to go above yesterday's high, is there any reason to think that we would hold today's low by going down there? Maybe, but it's not a high odds trade. And Abdul is absolutely right. He says, I haven't seen enough confirmation, and he's absolutely right. We're not getting much confirmation here. There's hardly anything here. Who said that? Okay. Okay, good. Mm-hmm.
I don't know why, and I think I said, well, I think my answer to that, Gary, if you agree,
Mm-hmm.
is that the market falls quicker.
That's right. That's right.
It's slower to go up.
Right.
But when the bear sets it up.
Yeah, for the web, you may not have heard that, but Lance, or Lance, if we were thinking British, Lance, and who else said that? Nathan? Just Lance, okay. It said, I see signs of weakness so much more easily than I see signs of strength, and I'm always more in tune with shorting than I am with buying. Is there a reason for that? And Gavin, I think, hit the nail on the head, and that is that the weakness, when it does come in, it comes in fast. When that market falls, it falls quickly, as opposed to going up. You can even see it here on the chart. We're basically in a trading range here between yesterday's high and low, and we come down pretty swiftly. We go up, it's fairly labored. We come down pretty swiftly. So we like instant gratification, our species of human being, and so that's a good reason why. Fear is probably a stronger emotion than greed, and I would submit that greed is nothing more than fear. And I've thrown Gavin here on that one. Well, fear, you're afraid of losing something, right? Fear of a loss, okay? We can also have fear of missing out, but we can also have fear of leaving money on the table and not getting aboard a move. So it's just the other side of greed, if you will. If greed is that we have to make everything that we possibly can and then some, it's this fear of missing out and fear of leaving things on the table. I see it as fear. Yeah. And I believe, my personal belief is that fear is the number one emotion. It's not hope and it's not greed, it's fear. And I think it's always driving the market, truthfully. But yeah. Okay, so here we are. Just the market's not going to give up on you bullish guys. Here the market is saying, let's have another spring. Do we have confirmation now? Notice that we have the Weiss wave volume has now diminished. We had a little bit of buying coming in on this price bar. We rally up. We come back down. We seem to be holding here, and we get a fairly bullish bar. Okay? And we're at support. And the odds favor that this market will make another attempt at a rally now. Everybody see that? Let's see what happens. And it does. And what do we see here now? We see some good volume coming in on the Weiss wave, on this wave up, right? Now I've constructed a small trend channel here. Same old way we've done it off of the low, the two swing lows. These are not huge swings, but they're enough to construct a trend channel. And then the parallel in the middle. What are we seeing here? And what might we do here if we were trading? You'd wait for a break of the channel, okay? We have a good push up, as we see in the Weiss wave. We pull back, not much supply, but now as we try to drive up again, not much demand. And we're coming into where the market broke down from after failing to rally up above yesterday's high, okay? Also, if we draw a line here, I think maybe on the next chart I do have a line, this is an upthrust, or at least a hidden upthrust, okay? And look at the last price bar. We attempt to rally up, we fail, and this is resistance here, this level. We fail to hold, and we close back underneath the resistance. So a small minor upthrust. Some may call it a hidden upthrust. And also, we're kind of up at the upper end of the trend channel. And remember from yesterday, we talked about shortening of the thrust, the inability to go all the way up to the supply line. Supplies coming in earlier than we would anticipate from the position of the supply line. And here I've drawn it out here, so you can see it a little bit more clearly. Okay. Also, we have a little access line in here. David alluded to this earlier on. Market tried to go up here and found resistance and resistance. It manages a little bit more resistance here. It manages to get through, and now it's support and support. It breaks down through there again. A lot of trading through here. Awful lot of trading through here. And they can be very productive areas. And here we see that market come back into that area with shortening of the thrust, minimal wave volume to the upside, an upthrust, minor upthrust in a supply area. It's a good spot to go short, okay? Notice what I'm doing here too. It's not just reading the price bars now or the wave volume, but I'm pulling a bunch of things together, okay? I'm making an argument to myself that supply is going to, if supply is going to step back into the market, here's where it's going to do it. Because this is the structural point in the market where we would anticipate supply coming in. Make sense? And it comes down. And once again, we're trying to spring yesterday's low. Okay? But what do we think about this? Do we want to buy this in here? Not much volume on the up wave, right? And as we try to rally up, we're just kind of going sideways in here. And I'm thinking this is the way I'd be thinking. I wouldn't necessarily put a position short here, but I'd be thinking, boy, I couldn't rally above yesterday's high. I put in a lower low compared to yesterday's low. I've rallied up and I've failed to go higher. I've now got a lower high in this market. And the definition of a downtrend is to have a lower low and a lower high, and then to take that lower low out. And we are much closer to this low than we are to the high. And also I'm thinking to myself, the buyers had three opportunities down here to solidify their position and rally the market up. You know, in baseball, 3 times you're out, right? That could be, yeah. Gann was said that a market will hold 3 times, and then usually the 4th time it will go through. And that's, yeah. So if that's the case, and let's say we did take a short here, we're kind of at support, so it'd be a little bit more of a risky, but let's say that we are holding our short from up here. Where's our target? What's our target now? How would we create a target for ourselves? Anybody have any ideas? Anybody on the web have an idea? So Ken suggests that we take and make a trend channel from the high to the lower high and then do this, and we would have this. Let's see. That's what I would suggest. There it is. And there we are. So a couple of questions from the web. What about Fibonacci? I guess was he an Italian bar master? Did he make drinks at an Italian bar, Fibonacci? What's that? Leonardo da Pisa is his name, yeah. No, I'm teasing. I don't know about Fibonacci. I don't really look at that. Possibly you could do a Fibonacci extension would be one way to do it. And, you know, you can trade that way. That's not part of this method. But if that's something that you find useful, you certainly can do that and have that in your checklist. We notice, too, that we get that widespread bar coming down, and then it closes in the middle, or at least off the lows, and then the next bar is firm. And so we know that's a support level, that diagonal trend line. Another question from the web. Question was, would I think about going long on any of these springs? I certainly wouldn't think about going long here, and I wouldn't be too excited about here. Possibly here. Possibly here. But again, I think the odds are low on that because we failed to hold yesterday's high. We were up there and failed to hold it. That suggests that there's more supply in the market than there is demand. And so you have to be careful about taking springs like that in the context of what's happening in the market. What do we have left for time now? Yeah. What time do we end? At 4? And it's 2:45. We probably should take a... Yeah, okay, so I'll just wrap up from here. I think that's a good spot this is a good spot to stop. All right, so let me just do a quick summary. What we tried to do is take a look at integrating some of the classic ways of reading price bars by the volume and the spread and the close in comparison to where, in comparison to the last bar, in comparison to other bars in the same area. We talked about, several examples of that. And that we can also use this in conjunction with things, with other tools like the Weiss wave or Steve's W's and M's to give us a little bit more of an edge, to give us a little bit more understanding about what's actually happening right there at the live edge of the chart when we are in one of these critical areas. Okay, and I think it's a very, very useful tool to have in our toolbox to be able to do this. And so I just wanted to add that in and not let us leave this weekend without at least a little bit of looking at this. All right? All right. I guess we'll take about a 10-minute break. Does that sound fair? Oh, yeah, what time do we have here? It's 2:45, so let's say we get back here at 2:55, 5 minutes to 3 Chicago time.